All right, so let's dive right into this.
Okay.
You've been probably keeping an eye on the markets, maybe thinking about making some moves in 2025. And, well, guess what?
What?
The Nasdaq is looking pretty interesting right now. It's like that friend
Yeah.
that always seems to be on a winning streak. And
Right.
we've got this article here from the Motley Fool.
Mm-hmm.
And
The name
you're probably familiar with them in the investing world.
Yeah, they tend to have their finger on the pulse.
Yeah, they do. They really do. So the Nasdaq has been absolutely on fire.
Yes.
43% growth in 2023.
It's wild.
Then another 29% on top of that in 2024. Wow. So, it just makes you wonder, can this really keep going?
Yeah, well, history might have some clues for us.
Okay.
If we look back at data going all the way to 1972,
Okay.
there's an interesting trend. After these kinds of big jumps, the Nasdaq tends to keep that momentum going.
Oh, wow.
On average, we see about a 19% increase in the year following a 2-year surge like this.
Okay, that's definitely getting my attention. But I remember learning that what goes up must come down.
Right.
Yeah, doesn't this kind of growth have to plateau at some point?
That's true. Markets are cyclical. And the current bull market, meaning a period of generally rising prices, is already 2 years old.
Okay.
On average, they last a bit over 5 years, so we're not exactly at the starting line.
That makes sense. So we might be somewhere kind of in the middle innings of this growth cycle.
Yeah.
But let's get specific. I love a good case study.
Okay.
The Motley Fool article focuses on Netflix.
Right.
And, I wouldn't necessarily think of Netflix as this unstoppable force, especially with so much competition in the streaming world these days.
Yeah, I hear you, but Netflix has been a bit of a dark horse.
Okay.
Their performance over the past decade is astonishing.
Yeah.
They've seen this surge of 1,740%.
Yeah.
It's like they've cracked the code to growth in this rapidly evolving industry.
1740%. Okay, now I'm really listening.
Right.
But what's really fueling that growth, is it sustainable?
So that's where things get really interesting.
Okay.
What's fascinating is that Netflix actually outpaced the Nasdaq's growth last year.
Wow.
With a jump of 83%.
Okay.
And it's not just about subscriber numbers.
Right.
They're making strategic moves that suggest that this isn't just a fleeting moment of success.
All right, you've got me hooked. Break it down for me, what's happening behind the scenes at Netflix.
All right, so their Q4 2024 performance is a good place to start.
Okay.
They exceeded everyone's expectations. Revenue hit $10.2 billion, a 16% increase year over year.
That's significant growth, but I'm guessing the real story is in how that revenue translates to profit, right?
Exactly. Their earnings per share, which is a key indicator of profitability, skyrocketed by 102%.
Whoa.
We're talking $4.27 per share. And get this, they added a record-breaking 18.9 million new subscribers. That's a 44% jump.
Okay, now those are numbers that would make any investor sit up and take notice.
Yeah.
Wall Street must have been buzzing.
Oh, they definitely exceeded all analyst predictions. It's clear they're doing something right. The Motley Fool highlights a few key things driving this success. Starting with their content strategy, Squid Games 2, for example, is on track to become one of their most watched shows ever.
It makes sense. Squid Games was a global phenomenon.
Huge.
But aren't they facing more competition than ever in that space?
They are, but they're not just resting on their laurels when it comes to original content.
Okay.
They've also tapped into the power of live events. Their Jake Paul versus Mike Tyson fight was their most streamed sporting event to date, and they even saw massive success with Christmas Day NFL games.
So they're not just about binge-worthy shows anymore. They're going after live events, something we traditionally associate with cable or network television. It's a bold move.
It is, and it's a sign that they're thinking about how to capture a wider audience, how to create a sense of urgency and must-see-now programming.
Right.
That's a powerful strategy in the streaming landscape.
Yeah, I'm starting to see why they're exceeding expectations.
Yeah.
But with this incredible growth comes a question, can they keep this momentum going?
That's the million-dollar question.
Right.
And to answer it, we need to look at where Netflix is heading next.
Okay.
The Motley Fool outlines 3 key areas where they're placing their bets for future growth.
Okay.
And each one is fascinating.
Yeah, lay it on me. So Netflix is killing it with their current content and these live events. So where are they taking this growth strategy next? You mentioned 3 key areas.
Yeah, let's start with something that might seem a little unexpected.
Okay.
Video games.
Oh, video games. Okay.
They've been experimenting in this space, and it looks like their efforts are paying off.
Okay.
Their game, Squid Game, unleashed, based on the hit show,
Right.
reached #1 in Apple's App Store in as staggering 107 countries.
Wow, that's impressive. It seems like a natural extension of their brand, turning these popular shows into these interactive experiences. But is it really a viable long-term strategy? I mean, the gaming market is incredibly competitive.
Yeah, you're right. It's a tough market to crack. But Netflix isn't just dipping their toes in the water.
Yeah.
They're planning to release a diverse range of games, from those based on their existing shows to party games, kids games, and even licensed titles like Grand Theft Auto.
Grand Theft Auto, that's a big name in the gaming world.
Huge.
It sounds like they're serious about becoming a major player in this space.
They are, and it's a smart move. The gaming industry is a multi-billion-dollar market, and it's only growing.
Right.
Netflix sees the potential to reach a whole new audience, to create this more immersive entertainment ecosystem.
Yeah, it's interesting to think about how they're weaving together these different forms of entertainment, shows, live events, and now gaming. What's next on their list?
Well, remember those live events we were talking about?
Yes.
Well, Netflix is doubling down on that strategy.
Yeah, okay.
They're adding even more live events to their lineup, including some major guests like the SAG Awards, a new John Mulaney talk show, and even Christmas Day NFL games in 2025.
Hold on, the SAG Awards, that's a huge deal. Are they aiming to become the go-to destination for live award shows?
It seems like they're moving in that direction. And they've also secured the rights to broadcast the FIFA Women's World Cup in 2027 and 2031.
So they're going after sports fans now, too. It sounds like they're building a live streaming empire. But what's the rationale behind this aggressive expansion into live events?
So there are a few factors at play. First, live events create a sense of urgency, a can't-miss-it factor.
Right.
That's difficult to replicate with on-demand content. Second, they attract a broad audience, appealing to demographics that might not be drawn to their traditional programming.
Okay.
And third, they offer opportunities for premium advertising revenue.
It makes sense they're tapping into existing viewer habits the way people have traditionally consumed live sports and award shows, but they're doing it on their own terms through their streaming platform. Okay, we've got gaming, we've got live events. What's the third area where Netflix is focusing their growth efforts?
This one might surprise you. Advertising?
Advertising. But Netflix has always prided itself on being an ad-free experience.
I know.
That's been like a major selling point for them.
It was, but they've adapted to the evolving landscape of streaming. They've recently launched an ad-supported tier, and it's proven to be incredibly successful.
So are they offering a lower price subscription in exchange for showing ads? Is that how it works?
Exactly. And it's resonating with a significant portion of their audience.
Interesting.
Signups for the ad-supported tier grew by 30% last quarter, and it now accounts for 55% of new subscribers in the countries where it's available.
Those are compelling numbers. It seems like people are willing to tolerate a few ads to save some money, but how does this impact Netflix's bottom line?
Well, it's a win-win for them. First, it attracts price-sensitive customers who might have been hesitant to pay for a full subscription.
Right.
Second, it opens up a whole new revenue stream through advertising. As their ad-supported audience grows, they become more attractive to advertisers, which means more revenue for Netflix.
So they're diversifying their revenue streams while also expanding their reach. It's a strategic move that seems to be paying off. But with all this growth and ambition, have they had to make any adjustments to their pricing?
They have. They recently announced price increases across all their plans, including the ad-supported tier.
That's a bold move, especially in such a competitive market. Are they risking alienating their subscribers?
It's certainly a calculated gamble, but they're betting that their content library, their investment in original programming, and their move into gaming and live events will justify the price hike in the eyes of their subscribers.
Yeah, it's a confident move for sure. But let's talk about how investors are viewing this growth story. The article mentioned Netflix's price-to-earnings ratio, which, if I remember correctly, is a measure of how much investors are willing to pay for each dollar of a company's earnings.
You're exactly right, and Netflix currently has a PE ratio of 36, which might seem high at first glance.
So does that mean their stock is overvalued? Are investors getting carried away with the hype?
Not necessarily. You have to consider the context. Given Netflix's track record of growth and their ambitious plans for the future, many analysts believe that this valuation is justified. Investors are essentially betting on their continued success. They see the potential for Netflix to dominate the evolving entertainment landscape.
It sounds like they're playing the long game, betting on their ability to innovate and adapt to stay ahead of the curve. But with all this talk of growth and potential, are there any risks or challenges that we should be aware of?
Of course, no investment is without risk. Netflix faces fierce competition from other streaming giants, and the economic landscape is always subject to change. But they've proven to be adaptable and resilient, and their strategic moves suggest they're not afraid to take calculated risks.
It's a fascinating case study, and it really highlights the dynamic nature of the market. So for someone like me who's interested in the Nasdaq but maybe a bit hesitant to jump in, what should I be paying attention to? What are the key takeaways from all of this?
That's a great question. Let's recap the key points we've discussed.
Okay, so let's recap what we've learned. It sounds like the Nasdaq has some historical tailwinds pushing it forward.
Yeah.
And Netflix is like this prime example of a company making some really bold moves in that market.
Exactly. We've seen that Netflix isn't just riding this wave of streaming popularity.
Right.
They're actively shaping the future of entertainment, diversifying their offerings with gaming and live events, while also strategically incorporating advertising to really broaden their reach.
Yeah, it's a really compelling story, but I'm also hearing some cautionary notes, fierce competition, economic uncertainty, and just that inherent risk of any investment. So for someone trying to make sense of all this, what's the biggest takeaway?
I think the key is to look beyond the hype
Okay.
and really understand the underlying factors that are driving growth. Netflix is succeeding because they're not just delivering content. They're creating this ecosystem,
Yeah.
like a complete entertainment experience that caters to diverse tastes and viewing habits.
So it sounds like they're trying to be the one-stop shop for all things entertainment.
Right.
But that's a pretty ambitious goal. Do you think they're spreading themselves too thin?
That's a valid question. Anytime a company expands into new territories, there's always that risk of losing focus.
Yeah.
But what's interesting about Netflix is they're leveraging their existing strengths.
Okay.
They're using their data-driven approach to really understand their audience.
Right.
And they're applying those insights to their gaming and live event strategies.
So it's not just about throwing things at the wall and seeing what sticks. They're making calculated decisions based on what they know about their viewers. But even with the best data and the smartest strategies, there are always these external factors to consider.
Yeah.
What about the overall economic climate?
Right.
Could a recession throw a wrench in their plans and in the Nasdaq's growth more broadly?
It's definitely a factor.
Yeah.
Economic downturns can impact consumer spending and make investors a little bit more risk-averse.
Sure.
But it's worth noting that the Nasdaq has historically been very resilient, bouncing back from recessions and market corrections.
Okay, so it's not like a guaranteed smooth ride.
Right.
But the historical trends and Netflix's innovative approach suggest that there's potential for continued growth.
Yeah, I think that's a reasonable assessment. But as with any investment, it's crucial to do your own research, understand your own risk tolerance, and consider your overall financial goals.
This deep dive has certainly given me a lot to think about.
Okay.
Netflix is pushing the boundaries of what an entertainment company can be, and their success is really intertwined with the fate of the Nasdaq. It's a dynamic landscape, and it seems like the key is to stay informed and adapt to these ever-changing market conditions.
Absolutely. The more you understand the forces that are shaping the market, the better equipped you'll be to make those informed decisions.
Well said. We've covered a lot of ground today, from historical trends to Netflix's ambitious growth strategy. Hopefully you found this deep dive as insightful as I did. It's fascinating to see how individual companies can really shape the trajectory of an entire market.
Yeah. And remember, the journey of investing is all about continuous learning and staying curious.
Well, thank you for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep diving deep.